Hey everyone, and welcome to this week's On the Spot. I'm Zach Strickland here with JP Hampstead, back from the road this week.
Yep.
We're here to talk about what's happening in this week's freight market, on the spot market specifically, but also other things involving the freight market in general. So JP, welcome back.
Thanks, man.
Yeah.
Glad to be back on the spot.
Good.
Had a nice quick little trip up to New York, but now I'm out of that city, thankfully, and back home. So our data is sort of recovering from the holidays. We've seen a decent pop back up in volumes, although nothing like December levels.
Right.
We have to say. I mean, January is still January, but important markets like Atlanta, Houston, Elizabeth, New Jersey have all shown fairly nice recoveries. Trucking capacity is still tighter than it was before the holiday period, but it's sort of gradually loosening back up. So I think the percentage of loads that are being rejected right now is about 7.5%, and we expect that to fall back probably below 5% eventually.
Yeah, just to give a little bit of context, 7.5% is higher than the summer peak in June and July.
Right.
So yeah, it's still tight. I mean, a lot of that has to do with obviously drivers getting back on the road. This time of year, we obviously have weather issues and things like that impact capacity. But overall, the market is going to gradually recover. I think the third week of January statistically is about as loose and as slow as it gets for the freight market in general. So, or outside of course, the holiday period between Christmas and New Year's.
Yeah, and we had some good jobs numbers actually come out just this morning. I think it was we added 145,000 jobs. Some of the previous months got revised downward slightly, but we're still at that 3.5% unemployment level. That's frankly below the natural floor.
Yeah, we talked about this a little bit with me and Anthony on our Freightonomics podcast this week about the jobs. Everybody is healthfully employed, almost overemployed to an extent. The quit rate is actually pretty high. So any of those brokers out there, they have those high attrition rates. It's an overemployment situation. So there's a lot of optionality for a person to go and switch jobs right now. And that really impacts carriers too, in terms of keeping drivers happy. In their space, they can just walk across the street in general. But we are watching this year. I think the theme will be how quickly does the supply side of the freight market come back down?
Okay. Yeah. So I think there's reasons to be constructive on the capacity side. We saw new truck orders come in low in December, 6.5% lower than December 2018. Well below replacement rates. And I think, but we've also been watching the used truck market, and we got some really interesting data over the past couple months on those 3-year models. Zach, you want to talk about that a little bit?
Yeah, so the 3-year model has been really resilient in terms of keeping its price up. Now, why this matters is the fact that when demand is high, that's going to elevate the price of a used truck.
Right.
So the more somebody's willing to pay for that used truck, that means that there's going to be an increasing amount of supply in the market because people are going to start snatching up these models.
Right.
Now,
and so we had that whole period of really, tons of new truck orders. And all the trucks that were being replaced were going into the used market, and they were being bought up quickly. Even though record numbers were being put into the used market, the prices never came down, which was telling us, alarmingly, that supply or capacity really wasn't correcting itself.
No, we thought it was going to correct itself really fast. I think we all make that assumption that the market's going to react quickly. Like once you see a problem, you're going to immediately solve it. And that's just simply not the case. If you think about investment cycles and how people, go through these, I decide to buy 10 trucks. That doesn't happen overnight. It's not like, oh, I got my credit card out, ready to buy a truck.
Yeah.
And it didn't happen. I mean, back in February, we were still talking about prices going up on the used price market. Now, the 4 and 5 year models did start coming down a lot sooner. The 3-year model has collapsed here in the last few months. I think, $10,000?
Yeah, from about $66,000 a truck to about $52,000 a truck now. So very significant depreciation, and which we think is a good sign. I think just basically means there's a light at the end of the tunnel, that people have stopped buying trucks as much, that this is going to be, we were talking before the show, there's a number of sort of slow burn factors that we think are going to gradually constrain capacity over the course of 2020. The used truck market and new truck orders being one of them. Another one being on the driver's side.
Yeah, the driver's side, we obviously have, we have AB5, which you don't think is going to have any substantial impact because they're not going to uphold it.
Yeah, we've seen multiple rulings come out in all the different venues that it's been challenged, kind of saying that, there's this federal statute saying that states can't really pass laws that affect the service or the pricing of interstate trucking companies. Clearly, outlawing, leased on owner ops, does. So I don't think that's going to be as big of a deal as something like the Drug and Alcohol Clearinghouse.
Right. The Drug and Alcohol Clearinghouse obviously is this repository created by the FMCSA that carriers now have to go through in their hiring process. They also have to report anything that they have found out into this clearinghouse. So it's a giant centralized repository. What that means is that anybody with a record of drug and alcohol abuse that have been arrested for will now be easily accessible. And also that leads into, the fact that a lot of these drivers just simply won't get hired as quickly.
Right. And I think it's important to note that unlike, for example, the ELD mandate, this isn't just like an on-off switch. This is a database that they've now just started populating. I believe on January 8th is when it went live. 6th. January 6th. So, about a week or less. And as the year progresses, as more data points are added, as more violations are added, drivers are added, et cetera, it will become, more and more of an overall capacity constraint. It's going to start off slow, it's going to build momentum, and at some point it'll reach a critical mass where it does materially impact carriers' ability to hire, carriers' ability to grow their fleets, et cetera, et cetera.
So we will actually enter a driver shortage, if you will, at some point, more than likely, and that will be because of certain things like, we also have increasing insurance costs.
Yeah,
things like that. So a person, not only are they not going to be willing to go out there and start driving on the road, but this Drug and Alcohol Clearinghouse is actually going to have an impact on the insurance cost aspect.
Yeah, I think that if it can be shown that the clearinghouse does make fleets safer, with the high premiums that trucks are paying now, I think more insurance carriers may enter the market and say, hey, like this risk is actually being mispriced. We should be able to offer it cheaper, and it might correct itself like that.
Well, we have seen actually insurance companies leave the market.
Right.
Yeah,
it's a cycle, though. It is a cycle, and once it gets high enough, it'll be attractive again.
Right.
And if it gets safer, then that's just that should speed it up.
And speaking of insurance costs, it is January, so that means there's a lot of winter weather out there. That typically will, cause a lot of capacity disruption in the market. You have that northern tier of the country, the Midwest, the Northeast, that gets dumped with snow. I think we were talking about before the show the Northeaster train that happened about 2 years ago.
Yeah, March of 2018. So my Passport Research team actually released a report this morning, kind of looking back at a bunch of severe weather events like Hurricanes Michael and Florence, the Midwest flooding of the spring of 2019, and also the 4 nor'easters that hit the Northeast in a row in March of 2018. Talking about snow, talking about driver sentiment toward those Northeast freight markets. It's pretty interesting. I think in general, and I've heard this from brokers too recently, that speaking of insurance costs, they're kind of saying that it's getting tougher and tougher to operate in winter weather events, that carriers are increasingly risk averse, that they just really don't want to put their trucks in the snow.
Yeah. And it shows up in the data, like the FMCSA data that we track. Fatalities were down significantly year over year. It shows that carriers are a lot more, they're hesitant to go into these environments, and they're trying to be safer.
And it's like, these snow events, if you're in it, most of the time they're in areas that are fairly well prepared to deal with snow, whether it's the upper Midwest, whether it's the East Coast or whatever. And it's just like, if you can, delay for a few hours,
sure,
even 12 hours.
These snow events typically aren't just training over an area. They come through quickly. They drop their snow. You can hold off for 5-6 hours if you need to.
They almost never persist long enough to actually disrupt business operations of shippers.
Right.
It's just these like temporary delays, and I feel like carriers have started changing their calculus and kind of figuring out that, hey, it's not worth it to put this guy and this load in danger for to make this appointment. We can reschedule, et cetera.
Yeah, and maybe at the end of the first quarter we won't hear the carriers talk about weather impacting their bottom line as much, but it probably will, because that means that they won't be on the road hauling freight as much.
Maybe.
But it does present a situation where you're talking about a contraction of supply in the winter when freight volumes are lower. So there's going to be these pockets show up more often, I think, here in the next few months.
Right. So we at least in the first quarter, and potentially in the second quarter, beginning of the second quarter, the winter weather sort of changing behavior should play a role. We expect AB5 to perhaps not be that big of a deal. The Drug and Alcohol Clearinghouse will be more and more important as time goes on, and at some point we expect that to inflect capacity meaningfully. And of course, we're watching new truck orders, used truck markets, and that will play a role. That's the other shoe's going to drop, I would expect, in the middle of this year.
Yeah, and just to digress a little bit into what we're seeing in the broader freight market right now, we're the northern tier of the country has seen some of the tighter capacity. We watched Wisconsin this week, along with areas of the the plain states, the Midwest. Omaha, Nebraska had some tightening as well. But a long-running trend that we're looking at too is the collapse of the West Coast. Los Angeles volumes have just plummeted year over year versus last year. Now, last year we had the pull forward, and that appears to be diminishing like almost completely.
Right.
We're almost all the way back to where we were with LA, dead in the winter. Not doing as much activity, only to wake up in produce season around March and April.
Yeah, and that's it. I remember back in the spring of 2019 was and especially the spring of 2018 it was exceptionally hot, and those were both kind of weird anomalies. Q1s.
Yep.
Especially for the West Coast. So we might be seeing kind of like you say, a return to like a long-term normal pattern, which I think is pretty interesting. And we've talked about the port situation there and prospects for growth and long-term growth in TEU throughputs on the West Coast and what that looks like. But we'll save that for another week.
Right. And I am curious to think that if again, AB5 got pushed off, you don't think it's going to have a noted impact, but carriers had already made a lot of adjustments. I know Prime had adjusted by shifting they offered like 6,000 relocation packages to get people out of California before this happened. So it's hard to tell what exactly has happened. I don't think the shippers made that kind of adjustment. No. So this is a volume side adjustment, but I don't think that's had a noted impact.
Right.
Well, that'll do it for this week's On the Spot. Be sure to check us out every week as me and JP recap what we're seeing in the freight market for that week. Have a great week, everybody.
In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.